Hi, I'm Mr. Simons and welcome to 2020. How exciting. A whole new year and a whole new worth of content and videos and economic developments that we're going to be looking at. Now, I thought it would be useful to start this year by kind of looking forward, thinking about what are the kinds of things that we could expect from this year in terms of the Australian economy, in terms of the global economy, in terms of all sorts of factors that we are really interested in as economists. Okay, so what I'm going to do is go through an interesting article by an economist named Stephen Kokoulis. He's done a kind of look ahead piece for Yahoo Finance looking at 2020. And so I'm going to go through some of the key points he makes and to encourage you to look at those and keep those in mind as you are studying economics this year. So in this video, I'm going to look at 4 separate areas that Kokoulis looks at in his article. So I'm going to look at the outlook for GDP, firstly, then we'll take a look at employment, what's ahead for that. We'll have a look at inflation, and then we'll finish off in terms of what might happen with the Aussie dollar. So those are the 4 things that we're going to take a look at, and you can see the time codes on the side there if you want to skip ahead to something that you are super interested in. But you know, it's all good stuff. It's all good stuff. So let's start with economic growth and what the outlook is in terms of what this article is presenting. So over the course of 2019, Australia's economic growth was around sort of on average 1.7% in terms of annualised GDP, which is not a very strong figure. That the goal is sort of closer to that 3 to 4% range. That's what the government really would love to see. Now, in looking at 2020, Kokoulis in the article is quite optimistic about the chances for Australia's economic growth to, well, grow. In terms of his view, he thinks that sort of by mid-2020, we could see growth go up towards 2.5%. And then by the end of the year, Australia's economic growth could be around the 3% mark. Now, this would be a substantial improvement over where we've been and would help to reduce the level of unemployment and maybe fix some of the weakness in the labour market. But we'll get into that in a second. So you might say, well, what is the cause for optimism? So the first factor is that there's an increase in government spending on the horizon, an increase in public sector spending. So this is G in terms of fiscal policy, and that Kokoulis points to an increase in government spending coming from things like infrastructure projects. And that's going to act as a pretty substantial injection into the economy. Another thing he talks about is a rise in investment, particularly in business investment. And from sort of my perspective, I guess that's going to be helped by those ongoing low interest rates prompted by the record low cash rate. And that low interest rate level, which is likely to remain low for some time, could keep encouraging businesses to borrow more money because it is cheaper to borrow money and repayments are less than they might be if the cash rate was higher. Third factor in terms of why Australia's economic growth could go up is about an expected increase in consumer spending. Now, this is in terms of something called the wealth effect. So when consumers become more wealthy, then they are more likely to spend money, more likely to use some of that disposable income because they feel wealthy. They don't have to put it all towards savings. And a reason why consumers might feel that way is because house prices are expected to rise again. So rising house prices, rising asset prices, giving consumers a bit more confidence to go out and spend, which would support an increase in economic growth. Okay, so that covers the thoughts on economic growth. Let's now move to unemployment. In terms of unemployment, Australia's labour market was pretty weak in 2019. Unemployment didn't rise markedly, but it did sort of go between 5 and around about 5.2%. So Kokoulis in this article talks about how, the labour market's likely to remain weak for a little while. He says unemployment could rise to around about 5.5% potentially in terms of that figure, so that if unemployment is around about 5.5% and the Reserve Bank sort of forecast that the NAIRU, that non-accelerating inflation rate of unemployment, that point where there is no cyclical unemployment, that's around about 4.5%. So we could potentially be getting further away from that mark. But Kokoulis has a little bit of optimism in his article, that he's saying that if that expected increase in GDP comes through, well, then unemployment is likely to fall, underemployment is likely to fall, and the labor market is likely to get stronger, because if there is extra growth, extra demand for goods and services, well, firms are going to need extra workers, and that will help to eliminate or at least reduce some of that spare capacity, or as economists like to call it, slack in the labor market, and tighten those labor market conditions, put some upward pressure on wages. Okay, so let's move to the third area the article talks about, and that is inflation. And I think our sort of main thing to remind ourselves is that the Reserve Bank of Australia has that target band for inflation, which is 2 to 3% over the course of the business cycle. But it has been the case that Australia's inflation rate has been below the target band for a substantial amount of time. That in looking back on 2019, that the inflation rate was below the target band for that whole period of time, even as the cash rate was being cut by the RBA. So Koukoulas is saying that if growth comes through, well, then we could see inflation get up to 2%. If growth is a bit stronger, we could see it creep up into that target band, maybe potentially 2.5%, but a lot of that is dependent on whether that extra growth comes through. Okay, so the final area that I'm going to focus on from the article is in terms of the Aussie dollar. Now, Koukoulas in his article states that the Australian dollar could trade as high as 77 US cents in 2020. Now, this would be a big shift from what we've seen, sort of looking in terms of 2019, that towards the end of the year, the Australian dollar was sort of sitting around that 66 to 68 cents range. So far in the start of 2020, it's been moving closer to 70 cents. But there is a possibility that, given sort of global and domestic developments, that the Australian dollar could appreciate pretty substantially over the course of this year. Why would the dollar increase in value? What would be the factors that would cause it? Stephen Koukoulas has a number of ideas that he puts forward. So he talks about increasing economic growth, that if growth is increasing on a global scale, that's likely to increase demand for Australia's commodity exports as all these other countries try to fuel and support their growth. And that would increase demand for Australia's exports, increase demand for Australia's dollar, which would push up the value there. Also, Koukoulas talks about sort of improving domestic conditions in Australia, particularly if those expectations for GDP growth come through, which would make Australia even more attractive to invest in and to increase demand for Aussie dollars to be part of the economy. Okay, so this is just one perspective on the types of things that could happen in 2020. Obviously, it remains to be seen, and other people will have other views. But I think it is very useful as you go into your study this year to think about some of these really key economic areas. So growth, unemployment, inflation, the currency. What is likely to happen? What are the factors that could affect these things? And how could it all affect the Australian economy? Okay, any questions, comments, or sort of criticisms, put them in the comments. And as always, thank you very much for watching.